Hi everyone, this is Paul Lange from Disciplined Trading Strategies with this week's Trade of the Week video. This is the week ending 11/1 of 2020 and the stock was Twitter. This was on Friday the 30th. It was based on a tier 2 gap with an entry on a 2-minute DTS sell setup. Management simple reward to risk about 1.9 to 1. As usual, free stuff this week. We have Monday night is the bi-weekly scanning night at DTS. If you're a member, you will automatically get your login. If you're not a member, head over to the DTS homepage and find out how to become a member. It doesn't cost anything, and you get lots of great trading information for free. This is the daily chart of Twitter. I want to point out, as I say sometimes, it's not always the best play of the week. The best play of the week this week was actually much better than this. It was Ford short on Thursday. But I had debate which one to put, and I really liked a couple of points on Twitter. And I'll explain what that is in just a second. This is based on a tier 2 gap. And that's the daily chart that you're looking at right there. And we're going to gap down to right there. Now, based on what I teach, this is a tier 2 gap. And as time has gone on over the years, I try and teach more and more the concept of reading a chart, what I call the language of charts. And taking literally what this gap was, it probably was a gap that you wouldn't be super aggressive at the open. But the total picture of really understanding what's going on, every chart's kind of like a fingerprint. And when you look at this, this is something that required an aggressive entry because I felt pretty strong this would have a lot of selling built into it, even though it was opening in a little bit of an awkward spot. It did pop just a little bit, which actually became the entry for me, and then it fell all day. I got most of that, but not all of that. This trade actually only lasted an hour. Most of that fall was in the first hour, but I didn't quite get the whole thing here. This is a 60-minute chart. It gives you a little better sense of where we did gap. And this is really the chart where I looked at it and said that this probably is going to get some good selling in here. It was unclear if we might pop a little bit or a little bit more, but once it started to roll, I felt this would have a really good sell-off. And you can see on this chart, that 60-minute chart goes hour to hour, so that first bar is only 30 minutes of trading. Come down to the 5-minute chart, and this is expanded so you can see the whole 5-minute chart. You're not seeing the gap or where it actually gapped from. So we open right there, and that was that fairly significant gap down. And you can see we ran up and actually got short right up in there. Just that little topping tail formed, and I felt as that started to roll over, that was going to be the best entry. Waiting anymore would only give up some profit. Again, that's based on that whole analysis of the gap and exactly how aggressive you want to be. Different gaps require different levels of aggressiveness in the entry. Sometimes these rally back all day or sometimes for a significant period of time. So you have to kind of know your gaps to pick the best entry that makes sense for what the gap's going to do. This turned out to be a pretty perfect entry. Target 1 was taken because we had a very quick drop right to the low of the day. So I took 1/3 off the table in there. And then down in here, we had another nice drop, took target 2. And then took target 3. This whole thing only lasted an hour. And I suppose I kind of would have maybe liked to just taken target 2 or target 3 was and let this go the rest of the day. But on the other hand, I might not have. It would have probably withheld any kind of a trail stop if I used it through here. But with this quick of a drop to 10:30, 11 o'clock, it's very typical that you see a stronger retracement, and then you have to sit with this to get that last bit of profit, and sometimes it never rolls over. So I was content with how I played this, especially being a Friday. I like to kind of get out of there early on a Friday because a lot of times things just fizzle. And here is the 1-minute chart. It gives you a little better detail on that entry. You can see the entry is right in there. Not right off the top, but just a couple minutes after the top form there. And you can see target 1 and I think target 2 is on this chart. Oh, target 3 is also, yeah, they're all there because they all happen within 1 hour. So there you go. The DTS Trading Room is where we get together and analyze not just gaps. Matter of fact, gaps is only a fraction of what I do. I like the normal, just good old-fashioned hourly chart plays that we find, evaluate, and pick the best of the best, whether it be from daily charts, hourly charts, or from the gap list that day, or from things we were looking at the prior day. Get the favorites out there and decide when and how they should be played. We focus on the opening 30 to 90 minutes for the most part, and then let things play out for the day. Occasionally looking at things during lunch when the market determines that that's going to be the best time to be trading. Until next time, this is Paul for DTS. Good trading, everybody.